earlier we were talking in the room. Here, I'll take off, jump off video. We were talking in the room about questions.
Yeah.
And spurious Omar, who is he wrote, why are interest rates going lower, markets going higher in the face of record inflation and all of the economic numbers? And I said, yeah, that's a pretty good question to lead off.
That's a great question. And the answer is nobody knows.
Yeah, no, do they?
Nobody knows. Okay, so markets are really kind of flummoxed here. Okay, now I'm going to take a little bow because I said I am not getting bullish the dollar, and it's interesting. The media is so full of shit because all they do is try to spin narratives and play to the large players. I was in Judge Room the other day, and I said, over the weekend, all I read was bullish articles on the dollar. Yen's going here, this is going there, and I go, no, and I've been adamant. I've been watching the gold euro, but to me, I said, I'm bullish gold euro, but that doesn't mean I'm bearish the euro against the dollar. I said, I have been pretty adamant. To me, the dollar has a lot of structural issues that have been paper overed by other people's COVID responses. And I think things are starting to filter out. And one of so let's go back to Omar's question. Interest rates really like right now, right? We're looking at bonds. The long end is the 30 years unchanged. 5 years are down a little bit. So we've gotten some flattening. Let me see if they posted it. I could use
a little bit, but a little bit this morning. Yeah.
Yeah. The hold on. The 530 is at 56 this morning as I watched. Oh shit. I'm on the wrong page. No, I'm not. I'm on the wrong page. I gave you bad data. So there was a lot of discussion. So, the curves are flattened a little bit again after they steepened earlier in the week, fairly dramatic.
Yes. They did.
One was on with you last week. We were talking about
last week. Yeah.
Yep. So, but rates aren't really doing anything here right now. They're kind of settled in, and you got. I know the Brainerd testimony is on now, going on now, and I read her prepared issue, and she's adamant about inflation. And I tell this to all these Fed people: you're adamant now. What? And they'll establish a counterfactual for you, going, well, the economy, the jobs rate wouldn't be 3.9 unless we did the things that we did. And I give a raucous bullshit. The emergency, as you talked about, these were emergency procedures, and emergency, we could all agree, ended at least, I would probably say in February of 2021, where it was an emergency situation, right? Certainly by April. So you overstayed adding 120 billion a month in reserves through your QE program. Why didn't you, if you saw these things, but in order to sustain it, you bullshitted us 3 times. You hid behind inflation being transitory. And I don't forget, but of course, the media doesn't challenge him, or nobody in Congress, although Toomey did actually challenge Powell. But again, you adapted the role of the Minister of Social Justice, and you kept proclaiming that real unemployment was far higher than the headline unemployment, and you kept promoting through no fault of their own. So you were on this path to sustain very high-powered monetary stimulus because you saw things different. Now all of a sudden you've shifted gears, but you've made such an enormous bet. And that's always been my criticism. if you don't know where this goes, why are you making such an enormous bet? This is, to me, a systemic bet. So, you know, again, they have done this. They've painted themselves into a corner, and now even Brainerd comes out, and her concern is inflation. Oh, yes, because see, and now they'll spin the narrative this way: we're concerned about inflation because of what it does to real wages, right? That's why they're out. And again, an enormous bet. So when Raphael Bostic, the president of the Atlantic Fed yesterday or 2 days ago, said he would commence quantitative tightening with 100 billion a month, okay? Well, all right, let the party go. I'm
Who
all
said that? Who said that?
Bostic, the head of the Atlantic Fed, who, by the way, is vying for a seat on the to be on the FOMC rather than just the his role as a regional president. He wants that badly, but I don't know. He may have been sidelined here because, you know, it's so pathetic that people look at the color of somebody's skin to denote whether they should be put forward. Not to say that they're not capable, but that's what their first response is. Like, I still maintain that the Fed has a problem here. Not the Fed, the White House. Because what is the White House doing? The White House is promoting wait, so Omar, before I go on, because I could jump on here, I don't want to get away from that question. So I mean, the answer is, I don't know. I don't know as to exactly, you know, what is moving it today. I think you're seeing some flattening in the curve because people are thinking, well, the Fed is talking so aggressively here, meaning members of the Fed, that, and there's some people think that they're going to err because there is some slowing going on in the economy, and they're going to make it worse. So that's why the curve is flattening. But if you listen to members of the Fed, and I'm going also back to Dudley's piece this week that got some, yesterday or 2 days ago, that got some notoriety. They're all convinced that the Fed really needs, for the health of the economy, to get the curve steeper, by the way. You know that. That's what comes out of, I think we talked about that Kansas City Fed article last week.
Yep. Yes, we did.
Well, they're all picking up from that, and they would like to have a steeper curve, and they think they can get it because so much of the Fed's balance sheet is in the shorter duration. So we'll call that 2 years or less. So the ability for that to run off on its own, or to actually sell that in the market, why they think it's going to lead to a steeper curve is beyond me. If you want to you can steepen the curve by selling off your longer end stuff, but that's not what they're talking about. So right now, as the Temptations would say, it's a ball of confusion. I think it was the Temptations. It's just a ball of confusion. We don't have any clarity from them. Those who are so adamant about putting forth forward guidance and giving clarity and transparency are just making a lot of noise and confusing. So where else you want to go to, Omar, from there?
Omar, are you here? Omar, are you here? He may have had to drop off. He's in, he was in Kuwait, now he's in Dubai, getting ready to go back to the Netherlands.
Okay. All right. So MBS.
He's unable to unmute. do we have him, is there like a server mute in this thing? Like or should he be able to unmute on his own? How does that work? Anybody know how to work this thing? It's on his end, okay. Maybe they don't like him talking and out in there, I don't know. No Zoom.
Zoom, zoom. Zoom, golly, golly. Oh,
Yeah. Nobody got that reference.
what are you laughing about with that?
Nobody's got that reference. The other day, my daughter and I were driving to, this is a separate note. We were driving to work out, and my 15-year-old, and I was talking about, I don't know, some TV show, the NYPD Blue.
Yeah.
She looked at me and she goes, what is that, a podcast? Are you serious? A podcast? But anyway, nobody understood the Zoom, that TV show that was on.
All right. So did we? Now I'm going to also tell you something. I recorded an hour and a half yesterday podcast. It hasn't been published yet. With Bernard Connolly.
No, my gosh, you're kidding. He's surfaced.
Oh no, not kidding.
Oh, is that Bernoulli?
Yeah, with Bernoulli. Yeah.
Oh my gosh, did he get him or did you get him?
No, he got him.
That's gonna be brilliant.
I haven't talked to Bernard in 4 years. I mean, we didn't have a falling out. Bernard just went below the radar for a while. He had some issues. He was really
I'm looking forward to that. I've got his book right on top of my desk. I am looking forward to that conversation.
Oh, it's an hour and a half with Bernard and Ira. So,
oh my God, we've got to get that widely distributed all over the place. That'll be great.
Yeah, that will be great. I'm trying to get him to. I'd like to make an inroad. Well, we'll talk about that later. Okay. All right. So where else do you want to go?
Matt Cicero.
Motion here.
Matt Cicero, you here? He's on a call. Mark or Seb?
Ira, hi, Mark Wisniewski. So, last week we talked about the price action in commodities.
Yep.
More crude oil, heating oil, and RBOB gasoline. Right now, I'm looking at June RBOB gasoline right now, which broke $2.50 for June RBOB yesterday. Actually, 247.5 was right around the close. Okay. So we talked about the underinvestment in crude production. OPEC sticking to their guns. They're going to slowly raise production and get back to pre-pandemic levels by the end of this year or early 23. Banks are calling. JP Morgan yesterday came out and called for $125 barrel crude oil for this year, $150 in 2023, when Brent was trading about $85 a barrel yesterday, based on falling OPEC spare capacity and growing recognition of underinvestment in supply. So we all know what the big banks' stance on investing in crude production domestically. So my question is, we know what DC did and the Beltway did back in November when we hopped on a call and we said, you know what, DC Biden has an issue. When he released barrels out of the SPR, quote unquote, they were going to have an issue if the headlines printed Biden releases barrels, crude closes, above that high or above that level. Something paraphrasing here. If we get to 125 on crude, which, it's the range from 2010 to, 2014, which is quite possible to get back into that range, which was a little lower than the all-time high back in 08 before we crashed. We're talking $5-6 gasoline this summer retail. I think that is going to come and dominate the headlines. What do you see from an inflation standpoint, including energy, if we're anywhere near sniffing $100 barrel crude. I'm just curious on what Fed and DC policy is going to be if we get to those levels this
Mark,
summer. Year.
It's that is such a critical question. And you know, I go back to we've had multiple discussions about this. I talked about the one I had with Joan Esposito on what would happen with the SPR. Now you don't hear a peep about the Strategic Petroleum Reserve, right?
No. Nope.
Not a peep. Because as anybody who thinks about this stuff and who can look at a chart, it was a massive failure because all it was this Biden administration, all politicians. I'm going to criticize Biden because he's in office now, and everything I say, this is nonpartisan. I don't get involved in partisan bullshit because that's arguing personalities and not policy. I'll argue policy. I'll discuss policy. I will not discuss partisan politics because that's just playing into the 24/7 nonsense that you hear when people don't have anything else to say. Well, let's talk policy. It's ridiculous policy because all they wanted was the optics of headline inflation. They're dealing with headline inflation. So your point is phenomenal because it also fits with what Peter Bookfire pointed out yesterday on the BLS numbers on rent, right?
Mm-hmm.
In their inflation numbers yesterday, the BLS had rents up 3.7% or something, where the National Realtor Association and other sites have rents up 17% year on year. Well, if the BLS, and this ties in what you're talking about, if the BLS numbers start to play catch up, because again, they just are lagging because the way they figure them, that means headline inflation is not coming down. If headline inflation is not coming down, the White House pollsters tell them that they are in massive trouble going into the November 22nd, November 22 elections, which is a policy implication. And that's exactly what you're talking about. So if energy prices go higher, and right now, one of the biggest discussions taking place is about what's going on in Europe with Russia and is Russia going into the Ukraine? Are they not going to, right this morning, the language coming from the Russian ambassador, this is pretty caustic, okay? It is nothing it's quite intense, by the way. So do you think the Russians, don't forget, 3 months ago, Putin was begging the Saudis and the Russians to increase production.
Right. And the interesting thing is, so you have, so right now, crude production domestically, so let's call it 11.5 million barrels per day. The high was 13 million barrels per day. You have refining capacity coming offline just because of overall, demand with COVID, refiners looking to get out because of coming policy, the war on hydrocarbons domestically. In 2008, lawmakers floated the idea of reducing the federal excise tax of 18.5 cents a gallon. Okay. They could potentially do that again, but that was when, that's only 18 cents a gallon, but that was when in 2008, gasoline was $4 a gallon, I believe on average $4 a gallon on the street. Crude was well over 120, 100 to the peak of 140. So the problem is you have taxes and whatnot. We're well over $4 a gallon now at 85 a barrel. I just think with refiners and where they are and where they've been pigeonholed, not looking to bring capacity online, I just think this spells disaster this summer for this administration. I think this is going to dominate many, many headlines here, and it's going to be it's going to be an issue. I mean, I guess when we're, and this is all just, you know, what I'm seeing here. Obviously, we traded a little bit differently, but
Of course.
this could spell big time disaster. And the problem is, you don't have the spare capacity in the SPR as you once did. So you release these barrels, you got to bring those barrels back. I mean, that was roughly half of 1 day of global consumption. They don't have the barrels in storage to do another big SPR release.
Well,
And it's just
let me raise it. You know, there was a swap agreement on those released, by the way, meaning that the firms were going to put the oil back in, right?
Yeah, they have to resupply it.
Well, I know that's where you're going. So that compounds their problem. They are concerned, again, they're only concerned about the optics. So the optics are about headline inflation. Well, they are, and so they have, you know, I'm really kind of pissed at the Fed because now all of a sudden it becomes so, as the White House has become concerned, they seem to become more concerned. And again, I'm not listening to Brainerd's testimony today. I read her release last night, which will be her opening statement to the committee, and I'm sure they're going to badger her and beat on her. Although the Powell hearing was a joke. A couple of people went out. Toomey was pretty good, and actually the woman from Wyoming, the Senator Loomis. I sent her a note. She hasn't gotten back to me, but she had an interesting and went after Powell, I think, in a very constructive way, and deserves so. You know, I'm not a fan of Powell. I think he's done a piece of shit job, and I'm not. And it's interesting that this, over the last 6 or 7 days, between Mohammed Al-Arian, Dudley has criticized him, Rick Mishkin has so ex-Fed governors have come out, you know, talking about where the Fed has erred. Well, if they've erred, coupled with Clarida, you know, resigning quickly, and the other resignation, by what measure should Jerome Powell be reappointed here? And again, I'm going to say it again, and I mean it, unless you're some dumbass, lazy buy-side ass on Wall Street, why do you think that Powell has done such a good job? I'm sorry, I'm just not there. And you'll wait for Bernard and I's discussion. So they've got real problems, and what they're really trying to do here, in my professional opinion, is they're trying to jawbone this. More than anything, they want to jawbone this. They think that because they have this false sense of bravado, because last year when the bond markets were absolutely, meaning the corporate and muni bond markets in March and April of 2020 were getting blasted, and then they opened up and they made some decisions, but they only spent, by their own admission, $13 billion, and they stemmed the massive bloodletting in those two financial instruments, corporate bonds and muni bonds. And they made money on their intervention, but they admittedly, you know, 4 or 5 months after the bloodletting stopped, well, they said they felt very comfortable that they had that they were really successful in jawboning it. So if they think they're going to jawbone this situation, they're smoking, and whatever they're smoking, it's far better than what anybody else had, and it's not medicinal. So it's not going to be done that way. But yet they're so arrogant that they think they can get this done in the same way, so that their effects on the actual monetary system will not be as great. I don't see it. I'm with you. I don't see it. But yet they're gearing up. And if they fail, oh boy. And now all of a sudden, and I think that's part of the story with the dollar right now, because my mailbox is full of people, you know, writing me about the dollar. Oh, did you see here? I just got a text as we sit here. Let's see what he said. From those who read my blog certainly know this name, Mike Temple. Mike is He says, US dollar weaker amongst all the Fed tightening talk. But that's right, right?
Yes.
Where it lies. So they're making a bet here, Mark. They're making a bet.
Ira, good morning. Robert.
Oh, no.
How are you, sir?
Did you get the shit off your boots? Hey,
I'm
there you
always
go.
full of it. Yes, sir.
Hey, Mark,
Especially
that's
when
for
I'm in the
you.
fields.
That's for you. You see what I'm wearing?
Yes, sir.
Whip inflation down.
To follow up on Mark's comments about oil,
Yes.
listening to Polish channels, there's still huge tension, geopolitical tension on that Ukrainian border. Putin played it so masterfully, like a chess game. First, he moves his pawns right on the border. Now he's demanding US military to move out of Poland. He's putting so many demands that will cost him nothing. At the end, he may either remove these soldiers from the border and he will get something for nothing, or the other scenario is, if you remember, when did they invade Crimea? It was right after Olympics or during the Olympics.
During the Olympics.
Yes. So watch the February again. Are they going to play any games hardball with NATO? Because yesterday's meeting with NATO was nothing, no substance.
No,
so I'm just kind of long prelude to say there is still geopolitical danger to oil price.
No, we were just talking about that before. I don't know. So I said that, and now they just came out. The Russian ambassador. Let's see. I'm going to tell you. This is a chess game, and again, look to see what Putin may really want here, not what the headlines convey. So he said, and this was interesting. I'm reading. It could be in Russia. They're hitting a Russian ruble thing because that's the politics of it. Okay, so let me give you this. Russia's deputy foreign minister said talks with the U.S. over security situation in Ukraine had stalled and suggested that Moscow could dispatch a military deployment to Venezuela and Cuba as the Kremlin seeks to pressure Washington to respond to its demands. So and I have a long discussion with Bernard about this in that podcast. So let's look at, Robert is so on target with this. What do we really think Putin wants here? I've maintained all along that he wants a written agreement that there will be no extension of NATO. Okay, and he wants it written so he can call it a treaty and have some international standing with it. Number two, he wants to show Europe that the United States is really a paper tiger, talks a lot, and all that they do is really create havoc by when they try to spread, quote unquote, their sense of democracy. And it creates all types of frictions, okay? That this is a new world, or maybe it's really not that much of a new world, as others have argued, that the whole concept of containment and why it was done, and that there's serious flaws in it. And now, of course, all the United States does is threaten to sanction. That's good. You will promote the expense of your blood, because Biden made a categorical, as did Draghi, when Draghi said that Europe just does not have the capacity to stand up to Russia. He said that 3 weeks ago, I believe, maybe it was a little less. And Biden, in that press conference, when they said there will be no sacrifice of U.S. soldiers in the Ukraine. So, and then I saw somewhere yesterday that maybe some senator discussed that they should just do a massive arms lift to the Ukraine, just like they did with Israel in 1973. I'm not sure where that came from. but it was from somebody high level. And I said, what a stupid, stupid gesture. I happen to agree. John McCain, and I like John McCain, but when he used to talk about sending more heavy armaments into the Ukraine post Crimea, I said, well, if you're not prepared to die, then all you're doing is setting up the Ukrainians to die for you, because you're going to arm them. But by the time you arm them, Russia's going to view it as a major provocation. Hold on 1 second, please. Yeah. Hello. What? Okay. Okay. All right. Good. Well, they got it. All right. Yeah. Don't go there. All right, I'll call you back in a little bit. All right. He's going to show that it's just a paper tiger, and he's going to make inroads. And Bernard actually and I have a long talk about it. And again, what gets left out of this damn conversation is Gerhard Schroeder. Gerhard Schroeder is a preeminent piece of this puzzle. You can't get away from it. The man was the chancellor of Germany, and he was the head of the Social Democratic Party, who are back in the driver's seat here. And he still has influence in the Social Democratic Party, and he's the chair of Gazprom. So there is a tie between Germany and Russia. And the Germans have been very careful here. Merkel, especially, and Merkel being East German. So there's a lot of things in play here. And I think that Putin is trying to show the Europeans that NATO is dead by so many standards. And I happen to believe that NATO is dead. In fact, I believe that one of the smarter things Trump did, but of course it got lost, in his early part of his presidency, when he discussed NATO and its failings and what they had to do. And it wasn't just coming up with more money. That collection action clause, which served NATO well in the 50s and 60s and 70s, I think that has seen its drop dead date at kind of end. So I'd be very careful with that, by the way. There are so many things in play here, but I think Putin is trying to drive a real wedge through all the way Europe sees itself. And Russia would like a greater statement. Now you can talk about that their economy is fragile, that this and that, okay. But I just have to look to say, what does Putin want, and not what does the United States want to relinquish in its role as an active guardian policeman of the system, right? I think those are very important questions, and it has financial ramifications, especially for the dollar. And the more that they use sanctions via SWIFT and other things, which have really proven not to work, but they keep, what were the comments coming out? Oh, don't worry, if they cross into the Ukraine, we will hit them full throttle. Of course, not militarily. Well, but don't worry, we have things. I don't know. There are many things in play here. The financial markets are not set up. They are not looking for it, because again, it's outside of what they want to believe the common narrative ought to be, right?
Let me ask you a question, Ira, and this could be way off base, but a while back, and I got to look through my notes to even formulate it correctly, but just off the top of my head, a while back we talked about the Fed instituting yield curve control.
Mhm.
So the market is kind of saying that they don't need to institute yield curve control at this point. But what we had talked about.
But why do you think that?
Well, I don't. Just because the markets are hanging in there, the strength in the indices, rates are rates are going lower on their own, or at least holding their weakness, and the 10-year and the 30-year. strength in the bounce off the lows of last week at 155.05 is, giving us another 1.5 on the upside. So maybe they do. I don't know. But what I'm thinking about is the dollar. One of the things we talked about was the dollar weakness.
Wait. Well, let me back you up here because you opened up a very interesting discussion. Now I believe that they do want yield curve control, but in reading the Fed and following the Kansas City piece from October of 2021, they would like to have a steepener because they've convinced themselves that if the curve flattens, which I've argued for you, Matt, how long we've talked for so many, that you're going to see ramifications. But they're more interested that the flattening will lead to the banks stopping lending because their profit margins will decline, so that there won't be as much bank lending, and that'll slow the economy. This is their playbook right now. So rather than trying to figure out how to hold long rates down, which the administration, somebody better ask the White House what they really think about this, because we know that if the long end of the curve will explode, the cost of financing these massive deficits that we've, and I'm not holding Biden to that. Trump has a lot to answer for that too, for his very flawed tax cuts. Again, my opinion, but it's proven out. But the cost of financing the deficit will ramp up dramatically. But they would like this curve to steepen because they think it'll aid and abet bank lending, which is one of the best sectors since the start of the new year. Of course, has been the bank sectors, right? Banks have done exceedingly well. So, but they think that they can control this, and because what did they put into place in July of 2021, which I railed about the way it was done, but they have this massive reverse repo operation, right? Mm-hmm. And they also put that standing repo facility in place. Mm-hmm. That standing repo facility, which could, as they said back then, could go over $1 trillion. We don't really know what but that provides them with some sense of being able to play with the curves, and they think that they can manipulate the curves by using those two facilities, by the way.
And aren't those two facilities, can't they use those two facilities? Well, no, forget it. Yeah, okay, I see that. And those two, the standing repo is going to, and those two facilities are going to continue to be.
Oh yeah, they use them, and if and
they can't take that. The banking system will collapse if they cut that, right?
Well, they put it in place because they wanted to stem the fear of the bond markets, like we saw running out of control, right? So rather than taking their bonds to sell to raise cash, the Fed will stand there and take basically as much as the market wants to sell. We can argue, well, how much is it infinite? No, it's a finite. What's that finite number? I sure can't tell you, but there is some sense to that, right? So, but they think that they can do this. I hope that they don't get tested.
If they continue to taper, if they continue to taper or increase the runoff, the unwinding and the runoff, will that put increasing pressure on the repo facilities?
On the repo facilities, well, we don't know yet because we don't know what the market reaction is going to be. Now, Robert, you still there?
Yes, I am, Ira.
Okay. So last Friday in a discussion in a different room, Robert raised a very important issue because he said, I went back and looked, and when the Fed raised we're going back to 2004, 2006 under the Greenspan.
And
Mhm.
2015 and 2018.
Yeah, I'm getting there. Hold on. So they raised 17 straight times, but at that time, if you look at your charts, you can put them up, gold actually went higher.
Yes.
Even
Yes.
though they raised at 17 straight meetings, 25 basis points, so that got you, they raised so Fed funds started at 1% and they went up to 5.25%. Before the onset of the great financial crisis. When they started raising rates under Yellen, between that and Powell's taking rates up to basically 2.5% prior to his running for cover as the, we go through the second half of the year in 2018, and especially the last quarter of 2018 when he hightailed it out of that situation, me and Powell, they raised rates, as Robert said, 9 times, and the gold kept rallying. The gold and other assets only declined when they embarked on quantitative easing. I'm sorry, roll that back, quantitative tightening. Now, the quantitative tightening took place after, because the Fed raised rates high enough to break the back of the subprime crisis, even though Bernanke maintained that it was well maintained. Those were interesting points, but the assets start to decline when tightening takes place because the system, okay, this is a very important point, and I only came to it yesterday in discussions. The system, and this was based because Robert pointed me in this direction, we talked about it, because when the Fed talks about quantitative tightening, okay, Bostic throws out 100 billion. I know why he throws out 100 billion, because they erred in the continuation of 120 billion, right? So he wants, and because the balance sheet has grown so tremendously over that period of time, that they feel they can roll that back. They don't know what the right amount of Fed reserves are, but they can start pulling them back by 100 billion. Okay, let's say you're right. But the other side of that equation is how much more risk has been levered up. Because if you don't know the risk factor and how much leverage is involved, you don't know where this goes. And that's the sorry part, is that they've unleashed this, but of course they won't accept responsibility for unleashing it. But it's a global phenomenon, as we saw. It's a fully global phenomenon, as we saw the outcomes in March and April of 2020. There is so much leverage in the global system. That, to me, is the great concern. That we just cannot get away from. And I don't hear a peep. You know, they'll tell you they're not concerned about the systemic financial crisis because the banks are robust with their balance, you know, whatever. We've seen that before. And as somebody just recently talked about what happened in September of 2019, when the repo market and reverse repo market went nuts, and they had to make sure that the banks became very capitalized, and they were just taken to task about it. But there are issues going here that are very complex, far more than what they want to give. You know, their lip service doesn't even touch, as far as I'm concerned. They're not even close to it. So I'm very concerned about it. And these questions are very important in regard to that. Very important. Because again, we don't know. We don't know, and they don't know either. The problem with me not knowing is I may lose some money. The problem with them not knowing is they've made some massive bets. Massive bets. And that's what's so damn disconcerting. they have made massive bets, and now they're worried because they're worried that maybe their bets where it was only asset inflation before, which nobody was concerned about because, again, that was fueling demand that they're so indebted to. So, okay, that's good. But, and it's only a year ago. It's August of 2020. No, I think it was August of this year. I mean, it's not even a year ago when Powell at Jackson Hole was discussing flexible adjusted inflation targeting, right? We're not concerned about inflation because and their rationale was this: it's been below 2% for so long that we can let it go above 2% and it'll just smooth itself out via stochastics, for over X amount of time. Do you remember that discussion? Anybody? Flexible adjusted inflation targeting. Go Google it and you can pull it up, and then you can scratch your head and tell me why Powell is deemed to be, another Greenspan oracle. I'm perplexed.
Ira, question for you. So if things get really out of control here come spring, we pass the fear and phase of Omicron cases peak the next 2 or 3 weeks, depending on where you are in the US. Let's say if cases peak in a month, springtime, people start to look past this, or late winter, people start to look past this. Fed goes in March. What precludes them from going 50 points? So, I think we all agree that they're going to have to go. Well, they're going to go 3 times, possibly 4. A couple of weeks ago, we talked about back in, the 1974, I think they raised 400 basis points in a few months, which was insane. But would they go 50 basis points in one time, or would they just kind of just say, hey, we're tightening here, we're going at 25 per, we'll just extend how long we have to go out versus shocking the market with raising 50 points. I just don't see what's wrong with going 50 your medicine sooner rather than later, unless it's a complete shock to the system.
It's a very good question. I'm in favor. I wish they would go 1% at the next meeting. That's me. I would, as I said, if I was running the Fed, I would have been at 2% long ago. That doesn't mean I was doing tightening, but I'd be I certainly would have ended QE, raised rates to 2%, and let's see where it goes. But they're always afraid. They're always afraid because they've built up this massive amount of leverage into the system by their policies, and they're afraid to quote unquote, rip the Band-Aid off, right? Mm-hmm. And it's sad, and it's the asymmetric nature. It's why, I think central banks have very little in my mind, but I know I'm more sophisticated because I do more reading and I have a greater history of it. But central banks have an asymmetric relationship because they cut rates by a full point, as we've seen, but they raise, because this is Greenspan's legacy, in quarter point increments. Why? Your point is well taken. Why? If you have an inflation scare, the longer you prolong it out, you're not, until you, again, the concept in a fiat currency world is what are real yields, not nominal yields, real yields. And as I've talked about over 40 years, if I tell you what the real yield on a US 10-year treasury is, it's 2.5%. We are nowhere near. Nowhere in the world. And everybody has followed the Fed, because if you didn't follow the Fed, the euro, had they not gone that route, they'd said that they would have had a depression. They're full of crap. They would have actually forced themselves into some actual quality fiscal stimulus, but everybody's gone down the same rabbit hole. The Japanese are in a different situation. I always hold them out differently. I look at it differently. They're not all in the same, but they follow the amount of liquidity created on a global basis, and then you provide leverage because of course everybody's leveraging up, everybody who can, let me put it that way, and not for productive assets, so to speak. Yeah, some, but not really. So we've sustained a rapid rise in hard assets, artwork, automobiles, metals, cryptocurrency, whatever we want to deem that, real estate. So yeah, those have been sustained and pushed higher and higher and higher so that you have more and more risk in the system, which prevents you from doing exactly what you're talking about, which is being more aggressive. There's no Paul Volcker out there. I'm telling you, I can remember when Volcker made his Saturday Night Massacre and raised interest rates 2% over the weekend.
Yeah, it's crazy.
That had to be one hell of a Monday open.
I thought it was a Saturday Night Live skit. And believe me, I was trading at the time.
What year was that?
I think it was 1979, October of 79.
Yeah, it's funny. I having these conversations with my folks, and they talk about getting a mortgage in the early 80s, and you talk about paying 12% for a mortgage, and you're looking at some inflation metrics that we haven't seen since then, and you look at what we're paying for a 30-year fixed mortgage right now. It's still incredibly cheap, but people were complaining that mortgage rates are up 100 basis points from where they were at the lows, and people are talking about it, and it's
it's laughable.
Yeah.
Believe me, my first mortgage I took out in I think let's see, probably November or December of 1980, 12.5%.
There you go.
But of course, real estate was a lot cheaper, so there is a give-get there, right?
Right. Yeah. What happened to the market? What would happen if they came out as aggressive in March as Mark hypothesizes and as you'd like to see? What would happen to the markets in a hypothetical way? Or what happened in 79 when Volcker, the Saturday Night Massacre?
Well, there wasn't as much debt load in the system, by the way. So even though there was times of inflation, but the economy went through the 70s was not a good economic time. So you didn't have people, first of all, the ability to leverage up like that just didn't exist, by the way. Didn't exist. So he could do it and cause a lot of pain. Unemployment jumped, dramatically as it went on. And believe me, Volcker was the most hated man in America. I mean, the farmers would show up at the Board of Trade with their tractors, having demonstrate. Everybody was, because the farmers, of course, they're one of the most levered groups because they're always borrowing more to buy more land, and they're until the crop comes in, a lot of them carry debt. So these were serious. The building trade. I mean, he was under death threats regularly. So it was bad, but don't forget the stock market. Well, the stock market really didn't begin its rally until August of 1981. So
that was also that ripping off the Band-Aid of that and causing that pain, and it was painful. I remember. I was just a kid, but I remember all of those discussions going on and for years. But that was the beginning of ushering in unprecedented growth under the Reagan years and expanding into the Bush and Clinton years too, wasn't it? Without Volcker, we don't have that period of prosperity.
Yeah, you got some serious tax relief because they needed to do something serious, right? Volcker had squeezed the inflation out of the system. Now it was time to find out what was actually going to work, but you had to put, nobody was doing capital investment because what businesses were borrowing money? There were no, .coms, there was no real tech stuff yet going on. They were still arguing with IBM about whether it was going to be mainframe or, desktops, let alone, laptop, so there was a whole lot of uncertainty about what was really taking place. It's hard to measure it out in the way that you want to measure it. There are things certainly that we can look at, but minimus, I would say. So many of these things, the effects were minimus. Well, they were great on the real economy, but everybody, had partied on and everybody had gotten what they want. And had Volcker not crushed inflation out of the system, I believe America would have been in a far more difficult political situation because the inflation was eroding the middle class. Believe me, I lived in a very middle-class community. I went to college at the University of Illinois. With most people, that was it. They went to a state university. When I started at the University of Illinois, my tuition was $175, and by the time I left, it was $275 plus fees, and people were insane about it. So, it was a very trying time and people had to learn to adjust to it. But we had come out of, lack of capital investment. So when the turnaround came and with the big tax changes, they, Bob Dole and Ross, they went to work and they figured out a way to start rebuilding the American capital base through tax cuts. Not all was great, but things did turn around once there was some stability in the system. But again, one of the most important things going into it was that we were not carrying shitloads of debt like we are now.
Yeah. There isn't any easy way out of this.
Oh no, there is. Mark my words. There is no easy way out of this. Oh yeah, if you're an MMT person, there is.
Yeah.
Well, but that's the point that most people don't understand. They understand MMT, but if you go back and look to what Warren Mosler and the others who promoted it, we can go back to the 40s where they say, what's his name, really pushes. But even Stephanie, who's the one out there promoting it, I'll come up with it. But they talk, if inflation really would start to rise, they said a responsible electorate, and this is the key to it, a responsible electorate would vote to raise taxes in order to slow the inflation process down. That's their answer to it. Stephanie starts with a K. Come on, somebody help me. Stephanie.
I don't know.
No, hold on. Now I gotta get it.
Kelton?
Yep, thank you.
Thanks, Omar. Makes me look smart. I shouldn't have given you the credit. Stephanie Kelton.
Yep. Thank you. But it's dependent upon, as they say, a responsible electorate, which would actually move to, raise taxes. Good luck with that.
Sev has asked a question, and he's asked it a bunch of, or he's put it in there a bunch of times. So I mean, and it's an incredibly broad question, and one that I think we've talked about in many ways, in many forms.
Who asked this?
Sev, his name is Sev.
Okay.
So he wants to know if the dollar is under threat of being, maintaining status as reserve currency.
We're not nowhere near that. Can it happen? Okay, and I'll come back to you, Seb, on the I see so the dollar is nowhere near. Now, as Bernard and I discussed yesterday, but is one of Putin's aims here, because if he break up NATO, does Bernard raise, not me, but Bernard raised the issue, does the dollar reserve status get undermined? Think about that for a minute.
Say that again.
If NATO were to disintegrate, would it undermine the reserve status of the dollar?
Yeah. Yeah. Wow.
So, okay. So that's something to think about. But again, and at the end of the podcast, you'll appreciate it because I have to bring Bernard back, because again, what Bernard presents, you're not going to trade off of tomorrow or the next day. So if you're looking for a dollar play, no, I'm not suggesting that, but it's something to be aware of. And I said, Bernard, we're talking to people who are trade and investors, and we have to come back to terms in which they'll deal with that. Not that, oh, I'm going to go out and do this. No, slow your roll, as we say, and know that you have to be aware of this. And when you look out on the horizon and see a big picture, these are things that I have to be attentive to. That's the important thing. They will come to fruition. But I learned I could never trade day to day when I would read and talk to Bernard all the time. But I had to think about these things. So I think the dollar is being undermined by the Fed, and because the Feds has driven the getaway car for the massive amount of debt. And it's always debt that undermines any currency. So that's historically. I don't know if I'm just, now I'm going to have 16 days. I'm going to Florida tomorrow. So I'll be reading, I go back to my sources of Burdell and through Kevin McCarthy, my good friend, who we read it kind of together. So he directed me to a couple of chapters in the third volume of Burdell, which I love. And I'm not being pedantic. These are sources I go to put my perspective in place, because as Pax and I have discussed, as Maddie and I have discussed for a long time, my strength and what I provide to you is context and nuance. So I'm just rebuilding my contextual base, or refreshing it, so to speak. But Seb, you also asked that question. German let them build the pipeline, right? Not only did they let them, it was Gerhard Schroeder who put the legislation in place for it to happen. And then, and Bernard, I talk about it, and Bernard 100% agrees with it. After Schroeder does that, Gerhard Schroeder, he then calls an election that he doesn't have to call in 2005, because Germany's suffering a little bit under what was known as the Hartz IV, which was put in place under the Schroeder administration or chancellorship. And what Hartz IV was, and this is what gave Germany such a boost that Merkel was able to harvest, because as the Berlin Wall came down, and if Robert's, he'll maybe speak to what we're talking about. But when the Berlin Wall came down, coming down, and Russia basically saying they couldn't support the Soviet Empire anymore, so that was over. And so Germany was eyeing Eastern Europe as a cheap labor pool, a high quality, cheap labor pool. in the same way that NAFTA was put together. By 1999, 2000, the German unions understood that there were a lot of jobs that were going to move east. So they agreed to freeze their wages. And you're talking about some of the most robust unions in the world, the German unions, the German trade unions. Hold on one second. Yeah, yeah, I'm in Pax's room, so I'll get back there. All right. Bruce Light.
Oh, tell my son.
So the German unions were very aware of what was going on. So in their wisdom, they agreed to freeze wages as long as the jobs were not moved. Because the German manufacturers already started moving out. The Eastern European labor force, there was nothing wrong with that labor force. High quality, highly educated, and cheap. Wow, that's nothing better than that. And but the German unions pressed, okay, we'll freeze wages, you don't move jobs. And it was, at first there was hardship, but by 2004, it was already starting to bear fruit. Germany was the world was just coming out of some bad years. And Germany was well positioned because everybody else in Europe's wages were rising. So you see what Germany does over the next 10 years. They run massive trade surpluses within the European Union, by the way. Massive. Not just around the world, but certainly within Europe. And it crushes Greece, Italy, France. But that was all done. But Schroeder calls an election that he doesn't have to call because his term, I don't think was up until actually going to be up until it's a 5-year. If I know France is 5 year, I think Germany is 4 year. So he didn't have to, but he does. And he loses. The Christian Democrats win because they were coming out of some hard times. And had he stayed, the better times. So he loses and immediately takes a job with Gazprom, which he had put the legislation in to build that pipeline. Nobody wants to discuss it. This is huge to me. And
that is huge.
And it reflects Putin's brilliance. Everyone wants to just call him a thug. I wish we had American policymakers who had that much foresight, by the way.
Yeah, you're right.
He knew where he was going, and he had an active participant, Gerhard Schroeder. Can you imagine? Bill Clinton actually have gone to work for the Russians after he left office? I mean, he might have, but we wouldn't have known it. But can you imagine if he took a high-profile job? It would have been met with such animosity. There was the story, and Dennis Gartman ran with it back during George W. Bush's administration when the Commerce Secretary was offered a Russian job in the Energy Department. What was his name? And he was going to take it, but the acrimony against him was so great, he eventually turned it down. I'll have to ask, because Dennis wrote a lot about that at that time. I'm going back to the 03, I forget what his name was, but wow, are you freaking kidding me? I it really, truly reprehensible.
And then, the world is getting more and more illogical and unreasonable and shorter and shorter sighted, and things are becoming more and more black and white and divisive. The Fed is stuck holding the debt, the burden of massive debt, as is everybody, everything else. the world continues to, the people and societies continue to burden themselves with massive amounts of division and resentment and authoritative misery.
Well,
You've got another rematch, at least according to the media, of Clinton and Trump. I mean, this talk about short-sightedness. This is the best we can offer. When Volcker did 2%,
truly, it's heartbreaking, and it's
heartbreaking.
It's painful, and that's what we hear. So and there's so much, and now I know I saw Ray Dalio. Yeah, no shit. Zero Hedge is a joke. Please don't send me Zero Hedge stuff.
Oh my God, it used to be so good. It's
he's sensational headline. That's all he cares about, because he's interested in eyeballs. He's where he used to be a legitimate outlet to the mainstream financial media, which just now he's worse than there. But he just put out a thing. Brainerd said Fed's tool addresses demand side, not supply. No shit. That's a headline. If you don't understand that, you're in the wrong business to begin with.
Pulling it up to see if it's real. Oh God, there it is.
Yeah, it's ridiculous.
Unbelievable. I don't know. Everything just seems to continue to become more and more difficult and complex and heavy. Everything seems so heavy, and so now debt. I don't know why it seems to me like it's the same thing. It's the burden of the debt burden and the lack of real open and intellectual discourse and the price discovery and truth discovery, seems to be completely manipulated and controlled. I guess that's a better way of putting it.
Because everybody wants everything easy. Again, if you're sitting in this room or you're sitting in John's room or wherever, if you're looking for an easy route, you know what? I'm not for you.
Right.
I got nothing for you. Because if I thought that this was easy, you think I'd be doing this?
Right.
It's not. It's an arduous, difficult process. Because there are always those who know a lot more than I do. And that's how I start my everyday.
Are you working?
Yeah, sorry, go ahead.
No, I was just going to ask you, are you working while you're in Florida? You're going to be,
Oh,
I know you're going to be reading.
yeah, I'll be trading. Yeah, once I get the kids to go to school. In fact, that what Josh was calling me, because Jake, who's going to be 2 next week, is tested. He's been home for a couple of days, and he had to have a COVID test. So it came back negative. But my 19-month-old has COVID in New York, Alex's daughter. So
how's he feeling? How's she feeling?
I don't know. I'm going to check. I just found out yesterday. So we will take a look at it. But, the world is difficult, and it's more difficult and complicated. I'm telling you, get yourself a good bottle of whiskey, scotch, wine. I don't care what you drink, and sit back when the piece gets posted by Benugli, just listening to Bernard and having access to Bernard.
Oh, I can't wait.
And again, it's not going to be easy. And because he's from Manchester, his British accent, it's not a London British, and he's a little harder at times to understand, and he's soft-spoken, but pay attention, because he's going to talk to you about many, many things, and the fact that you get that interaction. And believe me, I'm so fond of Bernard, and as I told him at the beginning, I'm so grateful to him. He's taught me so much. And it's been such a pleasure. the fact that I have had access to him and that he's shared his knowledge has been a wonderful thing for me to experience in life. So
How did you meet him?
I met him through my friend. Well, I'd read the book. And then I didn't know that my friend Owen Brown was a well-established currency trader back in the 90s, knew him pretty well. I'm not sure how, but he put us together and it was love at first discussion.
How old of a guy is he, Ira?
Bernard, I think he's maybe 74, I think maybe 75, maybe a little older than that, but the last 4 years have been hard for him. And he was back in 07, his job, he was the key economic researcher for AIG London. And I used to tell him as I began to see AIG and what was going on, even before the crisis, but there were things out there. And everything that Bernard had put out to the AIG clients was so brilliant and on ahead of everybody else. And I used to tell him all the time, I said, it's too bad that nobody at AIG read a word you read. Read a word you wrote. It was very dark humor between him and I. I said, I didn't read a damn thing. It was good enough for the clients, but the people who were running AIG, yeah, we know everything already.
Isn't that crazy? You've got a mind and an intellect like his. You just kind of, no thanks.
Yeah.
It doesn't jive, it doesn't
What a
jive.
pathetic statement about the world.
Yeah, no kidding.
That's how the world works. And especially in the financial community. They put out so much shit. If I hear one more person tell me what Jan Hatzius thinks, I don't care. It's like Ben Bernanke is a forecaster. I don't care. Your record is pathetic. Jan Hatzius has the power of Goldman Sachs. So they have the ability to make themselves right like Kramer for an hour because, as their sales force gets, the work, they put it out. Oh, yeah, you know what? I don't care. Yeah, give me something with some, substance, not your nonsense that you throw out all the time. And if you throw enough shit out, nobody will ever remember.
Maybe that's the point.
It is the point. I know. It's what I call the Joey Granville methodology.
Hey, how's Sturch?
Healing. I talked to him the other day. He's doing much better. He was at the doctor when I talked to him.
Okay, thank God. I think about him all the time, and I do want to talk to him, but I don't want to bother him.
No, I believe me. Give him a call. Believe me, he's now strong enough. He can deal with it.
He's such a good man.
Do we have anything else? Let me go back to the.
No, I think that's it.
Yeah, and we can do. Believe me, I'll have access. I never get. My wife hates it. How do I share that GS rate hike schedule? Look.
Hey, Ira, did I share it with you? Hey, babe.
Hey,
I'm sorry.
Hey, Pat. Hi, babe. Did I share that with you the other day?
Yeah, but I mean, it was out all over the place, and because that's what they're doing, and as well as anybody. There is no bad publicity, right? No, so whose quote was that? But there's no. Bad
it sounds like something Rahm Emanuel would say.
No. Although, I actually turn on at times when I'm bored. If it's late, I watch that Goodfelt on Fox because there's that guy on who I really like, Tyrus. The guy's really. I tell you what, Black conservatives and Black pragmatists are the saviors of America if we listen to them.
I agree. I 100% agree.
And he's really, really good. But last night, because he has a panel that he puts together that they talk for an hour, and it's all such shit I can't listen to. But as soon as I saw that he had Rod Blagojevich on, I turned off the TV. I said, I gotta go to bed. before I throw up.
You can't leave, you can't. Rod's got. Rod-
Penn, what's wrong? You're getting on
Yeah.
You're getting on Herschel Walker? Why? You got a problem with Herschel?
What's wrong with him? That guy, he's got some sort of mist spray or something that the FDA and, the guy's a bullshitter.
Oh, I haven't heard that.
There are more fucking charlatans that have come out, it's just like, the world is full of them now. We're littered everywhere you look. There's some stupid charlatan.
They're everywhere. And you know what? They're bipartisan in nature because they come from both sides of the idiocy.
Yeah, well,
Yes,
you know
they do.
what? Flush the toilet on the country.
I'm sorry.
No, I'm joking.
I didn't hear what you said.
I didn't say anything worth repeating.
Any other big questions we want to, but I don't care what Goldman says.
No, I thought it was interesting just to share that, like, it's been everywhere.
I know.
Okay, I got it. Like everybody I know got it. It's like, okay.
Yeah, they sent it everywhere. But but again, I go back to Powell has been heavily criticized. They don't say Powell, but when you talk about the Fed, you're criticizing the chair because the chair directs the policy, right? And I haven't seen, and he's directed it pretty good because I have not seen a no vote on any policy statement in quite a while. So he's directing traffic. It's his burden to deal with, as far as I'm concerned, right? He owns it. And when Mohammed Ali, I mean, he's having people criticize him and the Fed, Dudley, Al-Arian, Rick Mishkin. These are, and I'll tell you what, as I said, Jason Furman coming out and saying that the leaked Biden appointees, which I think is a very critical factor, by the way. And that's, when I saw it, I said, and this was over the last weekend, I said, there's no way you can be bullish the dollar. The White House, they want to deal with headline inflation, but they want a Fed board that is so compliant and complacent that scares me, because the three nominees, and Jason Furman confirms it, are so dovish. I have the quote written down. It was, shit, hold on. I got to read. The exact quote was, I'm like Ray Rayner here. I got so many notes.
Where's Dudley? You got Dudley with you?
Yeah. Oh, we were just talking about Dudley. Yeah, Dudley. Oh, wait, hold on. I know I have the direct quote, so we'll share that. When did I put that out there? Come on. Let me scroll back. Brainerd. Any other, did I miss any other headlines on Brainerd?
Not that I've seen.
But when you put Brainerd next to Yellen, it raises the age-old question of Ginger or Marianne. Thank you. Thank you. Thank you.
Hilarious.
Huh?
That's hysterical.
I'm so brutal. I can't help it.
Oh my God. Oh, in that case, I've got to go. Oh man, that's funny.
Thank you. Thank you.
Your reaction to it is funny too.
I enjoy myself. Sorry, Penn.
No, not at all. You going to Florida tomorrow? Everything okay? Just real quick.
Yeah, but my granddaughter in New York has COVID.
Oh.
19 months old.
Oh my God. I'm sorry.
Yeah, let's hope she's fine.
My little cousin, who's about 1.5 years old, cousin's grandchild also has it. The kids, that gets to me. Adults, okay, but kids
Yeah.
really kills me.
Yeah, let's see. Oh, here's the direct quote from a Rich Miller Bloomberg piece. The Biden appointees, this is from Furman, the Biden appointees to the Fed are considerably more dovish than anyone who's been on the Fed for a long time. That's
Oh my God, it's terrifying.
that's a direct quote. So it's something that you have to, and so again, the optics of the headline are wonderful for political, but they've been scared out of their mind, since the November elections, because the White House pollsters told them that headline inflation will sink them come November, and that's what this is about. And look at, I know that Brainerd, that's why her piece was as quote unquote as hawkish as it was from yesterday. Her husband is on the Biden national security team. She is a Democratic partisan because she contributed to Hillary Clinton's campaign. So she's a partisan. She has her marching orders, which is to discuss and tilt at the windmill of headline inflation. That's the marching orders. Now, how we go about making money, dealing with that, that's for us to do, right?
Yeah, exactly. That's our job.
Right. That is our job.